far. This is Max, your humble servitor in the house. It's been a long time. It's been a long time for me to be on YouTube. I've been so busy lately. I'm mostly organizing the indicators, getting some free time for myself, and to spend time with my family. So I haven't been there for quite a long time. So I decided to go back and start doing the YouTube again, and then I hope it will be plus for your journey, the trading journey. And what can I say? What can I say? Yeah, and, so far so good. Everything is. I hope everyone is doing very very well. And I hope you've been enjoying the Max Maserati model, all the updates we've been doing, all the updates I've done. You know what I mean? And then so far, I think you've been enjoying them. And if you have any feedback, do not hesitate to contact me. Give me some feedback. But before we start, so our main goal there is to do a analysis on ES, okay, S&P 500. I will try every day, at least for 30 minutes, to come here and do a YouTube analysis. So I hope it did help you out. Oh, before we start, I need to say that I'm not a financial advisor. I don't have any license tell you to enter a trade to get out of a trade. So everything I'm doing here is for educational purpose and it's my own point of view. It doesn't engage me, okay, on anything. If you decide to trade, it's your own responsibility. So let's just share the disclaimer page. Okay, like I said, we are going to make an analysis on S&P 500. So I'm going to share my screen. Okay, probably you're going to see a couple of indicators that have been working. Anyway, yeah. So both this indicator will be like mostly for some yeah, working. Anyway, okay. First, let's start. First we need to start with we need to start with um, we need to start with like our daily chart, not daily chart. So just give me 1 second to make this needs to be here by the way. Right, the other side. Okay. So yeah, I think it looks much better. Looks much better here. So anyway, okay, let's start on going. So first, we are going to make an analysis on S&P 500. You know, we as traders, we don't have power over the market. We don't move the market. Everything we do, it needs to be connected with the the commercial, with the institution or the commercial. So we need to know exactly where they are going, what they are doing. So in order for us to really have an edge in this market. So first, before we start, let's go on the yearly chart. On the yearly chart, so we're doing our S&P 500. On the yearly chart, what we can see last year, based on the Max Maserati model, MMCB, which is the Max Maserati model bias, we have a bullish body case. Okay, I think soon I will publish this indicator for free, which is the MM Maserati model bias. This one I'll publish it for free, and so you guys can have access to it for free, and which will tell you exactly uh, the bullish body, if it's a bullish body close, if it's a bearish body close, and so you can use it. You can know exactly what you expect for next day. For example, it will have a line top, a line down. It's a bullish body close, a bearish body close, so you know exactly what you expect. So, for example, last year, what we had a bullish body close. 2024 was a bullish body close. Since 2024 was a bullish body close, based on the Max Maserati model, based on the MMM, we are looking for price to what to deliver high of the bullish body close candle, which means since we body close 85.21%, so 85.21% of last year participants in the market were buyers. So we expect the buyers to keep pushing us up. We cannot guarantee that pushing up and close body close. However, what do we know? We know that price at least we take the high of the previous month. So based on the MMM, so we will say, okay, so we had the bullish body close. 85% of buyers on the bullish body close. So we expect high to the top. Okay. So what do we do? So we say, okay, this is 2024 high, high, and it's our target because we had a bullish body close. So we expect market to retrace back and then go up. Okay. So so this is our target, right? So what we can say, it's our target, and then this is our last line of defense. This is our 2025, 2024 low. Okay, we expect market to this is a buyer's defense volume. Okay, so we expect price to respect this area here. Okay, we expect price to respect this area, middle right. Okay, so this is what we expect price to do. We expect price to respect this area. Go and we can just put this daily, on the daily so we can always see. I'm going to put some label on this before I publish it. So we can know exactly which time frame you're in, you know what I mean? So yeah. Oh, this daily, this is the 12 months. Okay. So just gonna put it on daily. Oh no, let's put it on chart. Okay. So we here we have the bias defense volume level, right? So this is the year. So in you as a retail trader, in you able to um uh, uh profit from the market, you need to know exactly what the players are doing. The big players, the institution, and the commercial players. We have two types of big players in the market: the banks, the commercial like Coca-Cola, Boeing, all these company, but they are not here to they are not speculate in the market. They are here to business because let's imagine Coca-Cola. To make Coca-Cola, they need sugar. So if sugar price goes up or down, it Coca-Cola price. You know what I mean? So they need to age the business. So if they sell, if they buy, it's not about for them to speculate. Okay? It's for them to age the business. For example, if um uh for example the banks, big institutions, they are here to speculate in the market to make profit from high and lows. They want to buy low, sell high. They want to sell high, buy low. Exactly for us, we are the same. What they are the one when they get inside of the market, they can really move the one now. We can't. We are retail traders who are looking to make a profit based on speculation. So I will say we are in the same position as the big banks, but the only difference is that we don't move the market. So if we move the market, we cannot move the market. We are here to make the profit they allow us to take. So we need knowledge. Knowledge is the key for us to tap into this market and put something out and take something outside of it. Okay? So in order to do that, we need to understand how the market works. And for me, market is all about buyers and sellers of volume. If you have people buying, you have people selling, they are selling what, they are buying what. So, and then you need to know what is the amount of contract this side is buying, what's the amount of contract this the other side is buying is selling. You know what I mean? In order for you to understand that. So, and then it is plotted in candlesticks. The candlestick, you don't really need to care about you don't really need to care about what Trump is saying. What you need to care about is to wait for a candle to close. We wait for the candle to close. The candle close will tell you, like, will not tell you, will give you a very a more clear of what next candle can be, right? So if you understand the candle, you basically understand how the dynamics between buyers and sellers work. Okay, so that's why my entire system, the MMM, is based and focused on candles, volume, right? So so we have a bullish body close, which means price will take the high. And what we see, what we observing here, price came exactly into the high of the candle, which means price reached the target we are waiting for price to do. After price reached the target, or whether price could continue higher. Okay, since we have a bullish body close, we highly likely expect price to keep pushing higher. Okay, so next. Okay. So since we are in the yield candle, we have a clear idea what price did. Price already took the yearly target. Okay. Price is pushing down. So we need to have a clear idea. But we cannot have a clearer idea in the yearly, so we go down in the monthly to understand price much better in chunk. Okay. So what we do next? We go on the monthly. The monthly, what we can see on the monthly what we can see. So this was December 2024, and then as we can see, December 2024, what the market did, market closed bearish affinity plus. So if you know my system, you will know exactly what bearish affinity plus mean. It means that this candle could be pushing higher, the candle closed inside of the previous candle. Okay, so we expect candle to do what? To take the low of this candle. This is exactly what the next candle took the low and closed higher. Not close higher, push higher. And he took the high again. He gave us another bullish affinity line. But in that, we don't have a bullish affinity plus, we don't have a bearish affinity plus, we have a bearish affinity minus. So, and then if we have a bearish affinity minus, let's say pass to take this low, but it's a bearish affinity minus, the bear entered that storm. What price did next? Price pushed up into the high instead because this candle already told us based on the MMM candle bias. This candle already told us. So I can go back so you can really see what I'm talking about. This candle was a bearish affinity plot. So we are considering that this candle is not closed yet, right? So what price did? This is the low. This is what we expect. Pushing higher to this high as well. It doesn't matter for us. What matters for us is that we have a bearish affinity plus we're waiting for price to take this. This is our trade. And then when this candle closed, it closed seeking this way with bullish affinity. So it was seeking this way with bullish affinity. So seeking this way with bullish affinity. So you have a secondary story bullish affinity, which means the buyers were 22.61% more inside of this candle than the sellers. What is the next? So we are waiting next candle to what? Take this high, the high of this candle. Okay, close. We're waiting to close. This candle is still going on. This is the monthly candle. Okay, this candle, it took the high because we had a seek and destroy with affinity. Okay, we're going to see how this candle will close, and then this candle, and then this candle close. When this candle closes, it close bearish affinity plus. Okay, it closed bearish affinity plus. Let's say here. Let's okay. Bearish affinity plus, which means we're expecting price to do what? Take the low of this candle. Okay. So in December, we had a bearish affinity plus. In December, in January, we have a bullish affinity price delivered to the high, and then we have the bearish affinity plus. Okay, with 65.46% of sellers inside of this candle, which means we expect price to do what? To take the low of this candle. Okay, so next price to the low. Everything we expect to enter a trade based on the Max Maserati model is a bullish body close. And then we get our bullish body close because the market was telling us we don't want to push higher, we highly like to push down. And then we have the confirmation with a bearish body close. I always tell you that the bearish body close and the bullish body close, when they are even when they are bullish body close plus bearish body close plus, they are your best friend. Okay. And then, so what we expect next? We expect that price to do what? Based on the Max Maserati model, that price will take this low. Okay, so this is where we highly likely look for a trade when we have a bullish body close. Okay, since since we have a bullish body close here, what do we do next? We can go on the daily and find, for example, if we go on the daily, let's say we have bullish body close. We are just waiting for a bearish body close, okay, to enter this trade. So the market gives you a bullish body close here. You know what I mean? If price gave you a bearish body close here, this is what you expect. And bearish affinity minus, and then you have a body close here. So if you were to enter a trade, if you were to put the Max Maserati model, okay, this is something I'm working on to give you more information. So I will publish this indicator. I will update the indicator pretty much very soon, and I'm adding things on it. Just take this out, put the block so you can really see the top of the air blocks. Okay, so as you can see on the Max Master, what do you wait? What are you waiting for? You want to see that market change. It gives you an block which we had when past the target here. Bearish body close, bearish break, and price goes down, price up. And then if you were on the monthly market, I already told you, you have a bearish body close and you have a bearish break. So you will be looking for a trade inside of this, as simple as that. Okay, you'll be looking for a trade inside of this candle. Uh, let's border. Put it black. I really need the background. Okay, so this is our candle, right? So based on the Max Maserati model, you will be waiting for price to come 50%. So let's say we don't have this candle yet. We don't have this candle yet. So, and then you have a bearish affinity plus. You see, candle bias, bearish affinity plus. Okay. So what do you wait for? Is pricing in premium? Because you know we need to buy when price is in premium. We need to sell when price is in premium. Yes. MPD level, price is in premium. We should get the MMPD as well, price is in premium here. So you don't really need it anymore. I just you can see. Is price in premium? Yes. Reversal warning, the indicator will tell you there's a reversal warning. Okay. Last candle delta was pushing down. Current candle delta pushing down. Price delivery bearish. Okay, we are in premium. Well, they say we are in a bullish pullback. Okay, sellers 65.46%, volume 30.8 million, delta 9.5 negative, which means this candle is telling us that we are pushing down. What do we do next? We go on the daily. We go on the weekly, even on the weekly if you want. Okay, we're going to go on the weekly, but oh, you to have a clear idea. So basically, here, if we take this out, this is the middle of the candle. Middle of the candle. Okay, we wait for the price to do what? To reach the middle of the candle. After the price reach the middle of the monthly candle, okay, we're looking for what? A bearish body close. Okay, price gave you a bearish body close here. Price gave you a bearish body close. If price gives you a bearish body close, what do you wait? You wait for a reaction in the middle here. You frame your trade to get the best entry possible. Okay, so what do you do next? You wait for price tap inside. Price didn't tap inside. Yeah, almost. I'm gonna say almost. Okay, and then price tap inside. Okay, but price didn't give you a good entry, so you're waiting for your entry. Okay, so price come back to this level again, but price couldn't really tap in. So which means this area protected. So price give you the best entry around here. Let's put the MMM model. Okay, and then so price, in order to enter, you need a bearish body close. So you need a bearish break, and then price give you the bearish break here. Price we have, price give you another PO. This is why you this is your trade. That's all you need. And then this is where you take your short. So check before you take your short. If so, this high needs to be protected here. Before you take your short, what do you check? Okay, what do you check? You check is market. Am I in? We are in moderate. Which means we're going to get traded moderate. Okay, trade is going down. Confirming bullish resumption. It was the previous candle, and then this is where we say, okay, we target one. But if you are, you can go, you can even go deeper down to frame your trade. So you're daily. So you can what you can do again. Just okay, at the daily, you can frame your trade again and say, okay, I'm going to the daily now. I'm going to down to the 4 hour for market to be very body close again. Before all time frame to align. Okay, so this is a very body close. You wait. But President retrace didn't give you the close, which means you're not inside of the trade. You don't have no bearish body close. But however, you have a bearish break here. But since here you have a bearish body close to get in, you don't have a bearish body close here. You have a bearish body close, which means your entry will be at this bearish body close here. But the exact model. And then you flip your trade down and you try 1 to 2 again. So every time the market will give you a only thing you need a 4 hour to close bearish body close. For example, here you get in because price it was the next day price pushed down, and then here you're not getting in because it's not a bearish body. This is where you get the bearish body close here. Stop us here. And then when you're here, you go down to you can just frame it. No, and then so we can get a chance to get inside of this candle here. Okay, so we can say, okay, this is our next for our and then we can go actually to 1 hour. We go to 1 hour, okay, and then okay, so price gave you exactly come here and give you a bearish body close here. When price give you this bearish body close here, say, okay, this is my best entry is, or you can say, so since you're waiting for price to retrace in between, but price didn't really retrace in mid candle, price give you, price give you another bearish body close here, sorry. So we have a bearish body close in one hour here. Okay, so you can just say, okay, you wait for price to retrace on the bearish body close in 1 hour, and then you say, okay, alpha candle. When you have a strategy, you've tested, you've back tested, and then you just enter only when price give you a body close. You don't enter the scenario. Okay. This is how you frame your trade from the high time frame to the low time frame. And then will price get you in? Okay, price add you in. Okay, and then price this is one. Okay, price tag you in and price exactly deliver to the 1 to 2 and then price push up again. Okay, here, here. Okay, your stop loss will be here. Exactly here. One tick. Okay, take this away. Okay, your stop loss will be exactly one tick on top of the bearish body plus candle, and then you enter exactly the, but you can further go down. For example, you can further go down on the 15 minutes. For example, wait a minute. But even though you went here, you put the stop loss here. Price get you in. This is 1 to 2. Okay, price open and push down first. Give you your 1 to 2. Okay. Give you 1 to 2. This is a 1 hour candle. So which means we need to lower down. Price will have given you 1 to something. Let's go on 15 minutes. On 15 minutes, you'll be waiting for a bearish body close. Let's see to enter. Oh, actually, on the 15 minutes, so the 15 minutes will save you to not enter this trade because after this candle, this is a candle, okay? This is a 1 hour. It didn't give you any bearish body to enter the trade. Okay, so you didn't enter the trade. Okay, so that's why you need to go in the lower time frame to get all time frame all come like stack into each other. So which means you wouldn't get into the trade and wait for a bearish body close. You didn't get it here. However, you get your bearish body close here. We have entered the trade here. It will be a first entry, and then we take half of this candle. Half this candle. That's why you wait for price to tell you exactly where to enter. So you stack your trade together until all the time are aligned. So this is ideally where you want to take your trade. And so what you do in the 5 minutes now, the 5 minutes, you look for a bearish body close. Okay, so price will give you the bearish body close, not yet. You're bullish. You cannot get a bearish body close here, which means your entry will be around here. And she will be around here. So you can frame your trade like that, okay, until you go down to the lower time. Okay? And then let's get you in, and then eventually price push you up. Even you frame the trade, price never give you the opportunity to really enter. inside of the 15 minutes here. So it's like, why is it 15 minutes? Yeah, inside of the 15 minutes candle, this is when price give you opportunity to enter. And then, so price already went into this. Let's check. So these are 15 minutes, was it? 1 hour, 1 hour, 1 hour. What's this candle here? And then, wait a minute. Let's go back. Okay, let's go back. See? 1 hour. So bearish body close. Go on the 15 minutes to find a bearish body close. Inside of here, price went up. Price give a bearish body close here. This bearish body close, bearish break, and then it's a bearish candle, which is discount. Looking forward here. Here. Yeah, highly likely on bearish body close. Let's give you a bearish break here. So we have a bearish break, and then we have down here. Price is not good. So our should be here. So we have a bearish break. Okay, we have a bearish break. Price is inside of the box here. So basically, you have a bullish break, you have a bearish break, which means here you have your MMM external block, body violated, which means you have MMM. Eventually, so now you have MMM external block CBS here. So you'll be waiting for bearish. Okay. Now you have your internal block here. Okay, here. So this is where you have your wheel trade. So you have your wheel trade here. Okay. So even you have the candle, even you frame the trade based on the candle, you still need to have a model. You still need to like a follow through. So that's why you need to follow what the market is telling. So even you have bearish body close, bullish body close, bearish body close, bullish body close. You see, we were trying to find inside of bearish body close by going to the lower time frame to really have a proper view of the market. For example, when we had this 1 hour here, very close from here to here. Okay, this is the 1 hour closing very close. This is our 15 hour to get in. All right. So actually, when we go to the 15 minutes, okay, the market never gave us a bearish body close. The market never make a market super change. It gave us a bullish break here. Okay, so since market gave us a bullish break, we still wait for a short because our main bias on the higher time frame is bearish. And then market retrace, so it actually give us a bearish break here. Okay, give us a bearish break here. Okay, since the market gave us a bearish break here, so which means, wait a minute, let me come back here to show you why you need a model, even though you know how the market works, even though you know that the market work on body close, bearish body close, you frame your trade based on it. But that doesn't mean you don't need a proper framing of the market. So this is where the Max Maserati model came into account to give you the MM external block, the MM internal block, to give you the perfect moment to enter a trade. Okay, so now you know the market is going down. Right? So when you come actually reload time frame like the 15 minutes, this is where you frame your ultimate entry, and then the market create a bullish break. You cannot take a trade. You need to wait for a bearish break first. Okay? The market did create a bearish break first. So what are you waiting for to get into the trade? Instead of the trade, you're waiting for an internal block. Okay? The market push up. But the market did give you an internal MMA PO for bearish here. The market did give you a PO for bearish here. However, your external block here, this external block that created a bullish break here was violated. Since it was violated, this trade is not valid. This floor is not valid. You cannot take a trade, even if it's like you see, it's a perfect trade. You could have just entered here. However, this bullish break was invalidated because no, like based on the minimum rule, you cannot enter a trade if the market to the high of the candle. Okay, so you wait for another bearish break to confirm. The market push down. Okay, based on the you say, oh, I'm losing this trade. Okay, but here the market give you another break, give you another bearish break here. Okay, you get a bearish break here. Okay, so this bearish break now, you see the market finally give you another MM external block CDS. So what are you waiting to enter? You're waiting for the market to give you a PO. Okay, even the market gives you a bullish break, it doesn't really matter. Okay, I will something I will come days about something I've been doing on the MM. So now you have a bearish break. So this is what we're expecting to enter. And then what the market do next? Up. Okay, push up. Okay, get pushed up. Top the external block. Okay, ask yourself, how are we in premium or discount? NPD level is in mild discount. Okay, mild discount, we still can take a trade. Okay, but what are we waiting for? We are waiting for a PO4 bearish. We have a PO4 bearish in this trade, in this window. No, we have it here. Nice PO4 bearish. Okay, you have a nice PO4 bearish on here. So this is where you enter your trade. Now everything makes sense. Mid of the candle. So when the market, that's why you need a strategy, you need a model, you need rules to follow. Even you have a lot of knowledge about the market, you need rules. And then this is the moment now you get your external block CPS, internal block short. This is where you enter. Now, are you still? And then you have a MMPD bias, bearish constant signal that's with you, dimension, volume with you, bearish body close. You have your PO4 bearish here, internal block short, external block CDS is aligned. Everything is connected. This is the moment you can fully enter a trade. Even you go all the way up, okay? But you these two external blocks is has not been violated. Internal block short, and then you want a PO4 bearish. This is an MC2 candle that is telling you what was trying to push up and then now pushing down. And then you target 1 to 2. As simple as that. Boom. Okay, so this is where you enter the trade, half of the candle. And then you see if the trade will go in your favor. Okay, 1 to 2. Okay, 1 to 2. So what you can see, this level here, you see this level, the MM block was created. This is something I added in the Max Maserati model. It's 596%, which means we have a lot of volume coming in this external block CDS. A lot of volume came in, fire and fire, which means from the last 20 candles, when we take all the volume of these candles, this particular block was uh, 496% more volume than all the last 20 blocks we had, external block we had. And the market came inside of it. What the market did, market came inside of it, rejected it to, and then you have a PO4 bearish, and then this is what you trade. As simple as that. You from the higher time frame, you start all the confluences, you wait for the 5 minutes, for the 15 minutes to give you the market so to enter the trade. Remember, the MMM is you need an external block and an external block CDS short has not been violated, and you need an internal block. If that internal block touch the external block, is the best. Okay. For example, here we could have taken a very nice trade. Why we didn't take the nice trade here? Because the price violated this external block before it gives you this internal block. You could have entered, but it doesn't. It's not part of your rules. To be a profitable trader, you need to follow the rules, and you need to understand what price is doing. Okay, so this just was a quick overview. Okay, so let's go for the real things. Let's do a quick analysis of. As we know that the market now pushed all the way down during the month, during this month, during this month, price pushed all the way down. So what confluences do we see? Now we have we have an MMM external block. Now what we waiting for the trade, we cannot take any trade for now. If we were to base on the monthly basis, we cannot take any trade. Okay, no trade can be taken on right now. But at least we have a clear idea what price wants to do. So price went all down here, violated all these levels. Okay? And we have our MMM external block that push price up here was around here. So the best case scenario is if price could come down here, okay, touch this external block and give us a PO for bullish, which means we highly likely see price keep pushing higher. As we can see, price already violated a very important level. This is an MMM internal block that created this internal block CDL that created a market situation here. So price came to it to the liquidity. Highly likely, highly likely might see this price close bearish body close for this month. Highly likely. If it close bearish body close for this month, we highly likely see price keep going inside of this unfair pricing gap to fill it out. Okay, and inside of this unfair pricing gap to fill it out. So this is a high expectation. So these levels are the levels that we expect price to make a very strong reaction, which is 4,700 and 4,534. But where we expect price to come and make a huge reaction and give us a bullish body close is 4,348. And then we can check the buyer's volume difference level to see if we have any good level that yeah. Really? Okay, so which means, and then so when we go on the daily now, on the daily we'll give since the month has not been closed, the daily will give yeah, but we need to mark out. Now we need to go quickly. So this is the monthly. This is the monthly. Uh, came here and let's mark out the monthly. The monthly range hasn't been closed, so we don't really have something clear. But what closed is this bearish candle. So on the weekly, we have this bearish body close. And then last week we had a bullish body close. Since last week we had a bullish body close, a bullish affinity. We have a bullish affinity plus. Since we have a bullish affinity plus, last week is the last candle that was closed. So if you are trying to maximize inside, you need a candle close in the higher time frame to frame your trade based on it. Mostly is the last week candle. Last week candle is your best short. Last week candle is your best short. So you frame your trade based on it. You go on the higher time frame to have an idea of what you have an idea. The last candle close on higher time frame was this last week. Okay, so if last week was the last candle close, what do we see? So we have a bullish affinity plus. Bullish affinity plus. We can put this table back just to have a clear idea. We have a bullish affinity plus where we had the buyers 80% with 13.3 million with a positive delta. Okay? So price is moderate discount, which means we can still buy, and then we have a bearish highly maybe the price is bearish reversal. Volume strength is very high. Last candle strength was pushing up 587%, but it was red, and like the pair still have a lot of strength on it. And then sell two stars plus plus, which means this is the consensus. Which mean we highly likely we are in a sell environment. Okay, our last candle delta was negative delta, yes, but with a direction going up. So how can we increase our trade? First, let's see the market. We have the market exchange here. We have a market exchange at this level here. We don't see it. We don't get it right up. So this is our MM external block here at this level. This is our bearish break. You can see this is our bearish break. If this is our bearish break, we highly likely price hasn't come back to this level. So we highly likely expect go back to this level, up around here, and then push down. Okay, because what do we want to see? We want to see a kind of pullback, and then a bearish body close. A PO for bearish. So we have our external block, but we don't have any internal block yet, which means based on the weekly basis, we cannot take any trade. But if we base our trade on the candle, we'll base it on the weekly candle. But we are not really basing our trade in the higher context. The higher context is bearish. Higher context is bearish. However, since we're day trader, we look on the last higher time frame candle to take a trade. Last higher time frame candle was bullish affinity plus, bullish affinity plus, which means our target is here. The market hasn't taken our target, so our target is here. So this is our weekly target. This is our weekly target, and then this is our weekly low. Okay. So and then we can take this out now. Okay. So we frame our trade. So what we can see on the weekly, we see that we have a positive opening. We have a positive opening, which means when the candle open, when this week opened, the buyers were so strong, they opened price higher. So normally price needs to open at the same level it closed last week. But price didn't close at the same level. Price didn't this week the price didn't open at the same level it closed last week. So we have the open on the weekly. Because this is opening on the weekly. Right? And then what are we looking at now? We're looking for us to do what? To push up, to push up and take this high. However, we expect price to come down as well to fill this positive opening because the sellers will want to take advantage of this positive opening because it's one of the best opportunities for them to make money because they know at this level there's a lot of people willing to take if they sell up, there's a lot of people willing to take to exchange the contract with them so they can make a profit. However, the weekly target is all the way up here, which means we are bullish. We are bullish for now in a bearish in the bearish context because we are bearish break, which means on the weekly because it's bearish, this is just a high likely pullback unless price come and price create a market swing to change at this level. Because this is our last swing. Our last swing is at 5,827.5. Unless price back this level and create a market swing. So this area we don't expect price to close above it. Price can come and touch, but we don't expect price to close above. Highly likely will price come here. And then we have a We have a we have unfair pricing gap at this level here. We have an unfair pricing gap at this level, and we highly likely to sell price. I don't need to take this high to feel this unfair pricing gap. Okay? Where is my unfair pricing gap? Let me see. Hold on. Let me just mark it out. And do you have an UPG unfair pricing gap on which level? On the weekly. Since we mark out everything, so highly likely we expect price to take this high, get inside of the pricing gap, okay? And highly likely we expect this unfair pricing gap and come highly likely the sellers will come here because there's a lot of buyers here. They can exchange a contract. So we expect price to push up and then push down. If price decide to keep pushing up, so for price to come to reverse bullish, price needs to close above this level here, which is 5,800 837.25. But for now, it's our buy. So let's go on the daily. On the daily, what we can see on the daily, we had a last candle was a bullish close inside with bullish affinity, which means close inside with bullish affinity. So that was on Friday. So on Monday, price opened with an opening plus on the daily, on the weekly, the same thing. So we have a positive opening, which means price, the buyers were very strong. They could open price higher up. However, the sellers will not bring price back down to this level so they can capitalize and make some profit. Okay? So price will always come back to this level here to fill it up again. So what we expect now? We expect price to keep pushing up. On the daily, we don't have a daily candle. We don't have a daily candle close here because it's Monday. It's better to wait for the Monday candle to close. But what do you have? You have this bullish affinity plus. However, price already delivered. Price already did what it was supposed to do on the daily candle. Even you see the consensus is high volume. We have a bearish moment. We have a bullish. We have a bullish, but now we have a bearish momentum. But higher. So we don't really have a divergence because we price is bullish and then we are pushing higher. So which means we have a bullish momentum pushing higher. If momentum was bearish, we see this how will be pushing, pointing down, which means we have a bullish momentum. So see everything is green here. Confirm bullish resumption, you have a bullish pullback, pushing on, bullish, mine and print, blah blah blah. Yeah, see, all will be confirmed. However, the delta volume still not how would I say that? Still not converging with what we're looking for. And then since the daily hasn't closed yet, we'll check the last candle to close. The last candle to close was 12 hours or Sunday still. We don't have candle close the last 6 hours on Monday. Okay. The last 6 hours on Monday, the, this candle closing inside with, if I'm not wrong, closing inside with exactly. So this candle last 6 hours was a closing inside with bullish activity. So which means our target is exactly here. This is our target for 6 hours. Right, six high target. So this is our target for now. Okay. However, we expect price to come and fill this gap. Here you can see the gap very, very well. So we can see this gap is you can see this gap very, very well here. Which means price highly likely will come to this. But in order, it all depends. You can wait for price to either come back inside and push up. Or if price were to come in and close above this, you highly likely expect price to push. However, you will expect a lot of fight inside of this internal block show, which means we have here we have this external block, we have an internal block here, which means price will fight a lot before price take this high. Okay, 4 hour, what do we have? In 4 hour, and then we had a bearish body close on Sunday. Yeah, so today is Monday. On Monday, we don't really have anything for hours that will push you to take a trade. For example, this close bearish affinity plus. So we are looking for a bullish trade, and we we don't know until we have a 4 hour close that will be our closest high. But what do we know? It's like we have good liquidity on top. That price highly likely go up here, but price will encounter a lot of fight, a lot of resistance from the sellers to keep pushing. If price were to push up, price needs to do it with a lot of strength, with a lot of power. And if we go on the hour on lower time frame, since we are the bearish, I finished our last best shot is the bearish, bearish plus. On the higher time frame, where is the bearish plus? Okay, bearish affinity plus is the low, H4 low, H4 low. So we are higher context of time frame is bearish. On the weekly, we to do what? To push up, to retrace. To do what? To take the weekly target. But before price take the weekly target, this is a very complicated level for the market to push up because of what? Because we internal block short inside at this level here, which means the buyer is to push price down on this level. If price wants to push up, we need a good confirmation. It's telling us that price really wants to go up. We don't have it yet. We have no bullish body, nothing. But what we do know, we have a very nice, a juicy a seller's level here. Okay? Juicy seller's level that price might want to go to. If price were to come here first, we highly likely expect price to come back to fill the positive. If price comes to the positive opening first, we highly likely see price higher up. Okay, if price were to go up first, it means that price highly likely go back down to fill out positive opening. If price were to go down first to fill out the positive opening, price highly likely keep pushing up during this week. So the 1 hour, we have a bearish affinity plus. Okay, but we have a bearish affinity plus based on the higher time frame. It looks juicy. Okay, we have a it looks juicy. We have a bearish body close, which means we expect price to come down to this level. Can we frame a trade on this? Maybe yes, maybe no. We need to go on a lower time frame. However, we need to remember that price. We don't have any for. We are looking for a bullish trade. We don't have any 4 hour bullish trade. However, on the 1 hour, what do we know? We have buyers here. Nice exchange, nice exchange, highest area to exchange liquidity. Buyers exchange area. So this is where you might expect buyers to exchange a contract, but it all depends. We are very, very close. Did price take this high? Yes, price take this high. Price take this low, which means price didn't really have a clear direction. The only thing we know is that we have a very, very close in the 1 hour. Price overall Bearish. We're looking for a bullish trade. The only thing you can do is that now we say, okay, since we have an MMA external block, we have an internal block. So based on the rules, if we were to base our trade on on the 1 hour, we'll have a nice trade here. Very nice one. Then stop loss here, we enter here, right middle of the candle. Let's see the middle of the candle, and we target 122. 122. But if we enter this kind of trade, we need to make sure that the 15 minutes align with what we want to do. It's not like we're going to do it now, but it's based on the rules. This is a very good trade. We need to take based on the rules as well. We have a bearish break, yes, on the 15 minutes, yes. But the only thing we don't have yet here is a bearish, pure for bearish. So, so now is the moment for us to give you pure for bearish here, and then before you enter. A pure for bearish without violating this high of the external block. You see, on the 1 hour, external block, internal. On the 15 minutes, we have external block here, and now we're looking for an internal block. And then as we can see on the 15 minutes, we have a field portion, which means like if all fair pricing gap, the market didn't fail, completely fail. Okay, we have an on-field portion of 15 minutes. And 15, right? So, so now the only thing we're waiting to take a trade if price were to give us a bearish close here, pure for bearish. I mean, pure bearish will really confirm that whether go, and then price is already in premium. While you can see that price is this pink candle means price is a pullback, a bearish pullback. The only things we need now is a pure for bearish to have a internal block and then a red candle on the, and any of these context align will be the best thing. Now we just waiting until this hour close. Until this 4 hour close, which is 6 a.m. 6 until 10. This is 4 hour close at 10 New York time. We are bearish. After this 4 hour close, we don't know if we market is really wants to keep going up or down. But so far, what we can see, if we were to frame our trade in the 1 hour, we have the perfect MMM entry here. You could have entered it, but you need to go on the 15 minutes. For the 15 minutes needs to agree with the 1 hour before you look for a trade. You do have all the conferences, you have your MMX internal blog and external blog in 1 hour. In 15 minutes, you have your MMM external blog CDS. What you're waiting for now, it's a pure for bearish that will get into MMM internal block, and then this is where you're willing to enact. If he doesn't give it, it's okay. What you're looking for is bullish trade, but you don't have it yet. Good. I think basically that's all. And then you see on the 15 minutes, price highly likely. Price will come up here, all the way up here, all the way up here, because on the 15 minutes on the 5 minutes we have this on-field portion gap here also. So highly likely price will keep pushing, go highly likely. And then I don't really know if price might come here, but I don't think so. If price were to come here, it means that price has is high. So the best area for us to do is this 15 minutes fill portion. Fill it out and then give the bearish body close. Okay. So which means you cannot, and then you see on the 5 minutes, price is inside of premium. If price gets inside of premium and give you bearish body close, but price cannot violate this external block because this external block is what you're framing your trade is on the 15 minutes based on the 5 minutes. Okay. So now and then cheap. And then, as you can see on the 5 minute call, you have a bearish break with a external block. 15 minutes, bearish break with external. The only thing you don't have yet is your internal block short. That's all. And then you just wait. You don't do anything. You just wait. This is the moment you need to wait because everything is all about you waiting to get perfect setup based on your rules. You don't do anything outside of the rules. That's why it's important for you to go and back test your strategy. Market will give you a clear idea, a general idea, but to enter a trade, you need to wait for the perfect moment of the trade. Okay? So, and then let's see the buyers and sellers volume defense level. Okay, so this is one chain. We have 178% of buy sellers in this area, which means we highly likely see a lot of we highly likely see like the sellers will love to give control back to the buyers here. They will because we have 70% plus of sellers in this level. Okay. And let's see this profile, this indicator I'm coding for now. So the high level profile, it's we have price above the highest volume. Okay. And then which means price highly likely pushing up. Okay. This is what we analyze in the high time frame. So the only thing we're waiting here is but remember, we are in a bullish high time frame context, bullish high time frame context, and high time frame is better with context. For example, on the weekly, we have price retracing back. Okay? On the monthly, bearish context, weekly, bullish context, retracing back. Daily, we have bullish context as well. And then on the 6 hours, bullish context, 4 hours bullish context. And then the only bearish context we have is in the 1 hour and then the weekly. So if we want to enter this trade, everything needs to be perfect. Perfect. Remember, all the high time frame, yeah, bullish. You know what? It's even better you ignore the signal. Okay? Which means we are waiting. We are waiting. So far, we are waiting for what? For a bearish, pure for bearish. And that's all. If you have any questions, you can ask your questions in the chat. I can really see what's here. And if you can say hi, guys, you can say hi. I can see exactly what's here on the chat. If you have any questions, let me know. We can respond to your question. If not, I think that's all for today. So I'll see you tomorrow. If you have any questions, I'll give you exactly 5 minutes. Yeah, yeah. So far, so good. I hope you understand this the MMPD indicator because it's very important for you trades based on it. Very, very, very important. Okay, very important. Now, see here, you see all these bullish candle. They are a retracement, bullish retracement. Okay? And then you have a bullish bearish assumption here. But it's not a bearish assumption. It's not body close, and we're still in the bullish. It's still a bearish assumption here. They have up, price push up. You have a possible bullish reversal, okay? But but you don't really have a market structure change yet because market structure is on the bearish side, okay? And in the 1 minute, now you see, we are on the 1 minute. We are exactly on the highest level volume. I can just show just keep the line, this line. So this line is the highest volume. Okay, so this is something I'm calling, and then which means it is aligning itself with the bias we are in and out, which means we are bearish unless price come and here we are on the premium. which means the only things we're waiting for is like price give us a nice bearish body, a nice beautiful bearish. I expect price to keep pushing up and take this high. And so, yeah. So this is our analysis. So now price, it will price make a nice bullish resumption. Yes, we have bullish resumption here. The price close bullish body close here. We candle after a bullish pullback. Okay, this candle is bullish resumption, so we expect price to push up. Okay, we expect price to push up the level because this candle is a bullish resumption. So price needs to keep pushing up based on that. Yeah. Seems like you don't have any question, guys. So if this candle close bearish, we price is very weak. Okay, because it's a resumption candle, bullish body close. So we expect price to close bearish body close. Price to close bullish body. The bulls are very, very, very weak. So we have a bearish body close. So which means the bulls are very. So are we will price give us a bearish body close? Will give price give us a PO for bearish? We don't know yet. We just need candles to close. We really know if we get a PO for bearish. We have 15 minutes, if this candle work, but we still have a bullish body close on the 15 minutes. So which means it's still bearish. The side, I think we'll find a nice trade here. We never know. Okay, so there's a 15 minutes. One, out of it. Let's see. 10 minutes. Sweet trace inside. 5 minutes. And we have a nice unfair price up here. But the price coming out of it. We don't know. And then we have opening down here as well. We don't expect price to be down here. Okay, so we likely expect price to be pushing up. There's a 1 minute price create a bearish break. So for us to enter a trade here, we need price to create it. So now you see this candle, which was a bullish resumption candle, price couldn't follow up, and then price created a bearish break. So we have an external block. And then you see, since price and then price keep pushing down. Now, will price violate this level? Highly likely, yes. What? Because the higher context is bullish. Yeah. So the bull takes over. Bulls completely take over. Will this candle close bullish body close? Highly likely. If yes, this is where you can easily take a nice long position. Price right here. But remember, this kind of trades are, wait a minute. Why is this not on? One, two, three. Okay. Is we can take a very nice trade here. One buy limit. Price create a bullish break. Highly likely price will come back, but price already took the high. So remember, I'm entering this trade based on this candle, but price didn't retrace back inside of it. Okay, retrace me inside. Okay, so since the price didn't retrace inside of it, as we expected price to do, but price highly likely come back inside of this level. Price didn't create a market change all the way up here. Maybe price will come all the way down here inside of this unfair price. Again, remember when this trade is in high discount, high, what is called this price in high premium. Okay, so will price can come inside here? We don't know. But these are content. But plus, I haven't created the market to change it. We are very, very break. So normally, I will have love to see price create a market switch change here. So I will just wait. I will just wait. The price increase, market switch change. Price highly push up. Yeah. But I would have loved to see a retracement back inside here and then bullish body close. Price will retrace since we are in premium. When we are in premium, I don't like when the candle go there. We when close very body close, we fear that this candle created a very bullish break on top. I would highly likely let my trade for the retracement. So I was like expecting. So yeah, so what's coming back? I want to see the reaction. But price cannot give me a very good close. See, price is kind of weak. Don't like it. On the 1 minute, it's quite weak, and yeah, price is quite weak because here for now we are. Remember, this is a counter trend. Okay, this is a counter. No, not remember this. I was trying to take a counter trend. Okay, because we're looking for a bearish trade. Okay, since price we had a bearish assumption here. You see, you have a bearish break, and then price couldn't push up and then give us a bullish resumption. This bullish resumption couldn't make a market switch here. Since it couldn't make a market switch change, first, if it retraces back and push up, which means we are very powerful. I like this kind of thing. Okay, but it's better for you to wait because you wouldn't be able to know or to really predict. I'm predicting price. That doesn't mean I'm doing things accordingly. So as you can see here, we have a bearish break, but price didn't continue. We have a bullish restructure that shouldn't happen. That's violates the unfair pricing gap here, right? Since it violates the unfair pricing gap, and we have a very strong bullish candle, at least if price is very strong, price will retrace at least 50%. If you see this huge candle, highly likely price will high to retrace and then push up. So that's why I try to enter here. But price come back, which did retrace, okay? Did not retrace, create a bullish break, come where it was, go all the way up here where it was supposed to get a market structure. It didn't create a market structure. That's not the best case scenario. The best case scenario would have been at the opening of this candle, price take me in and push up, but price didn't. Okay, and we don't have any market structure change it, and we are in premium on that. It doesn't work. Okay, which it was a risk, but it doesn't worth it. So that's what I get out. Yeah, and see now price is it's the MPD is bearish. No, the MPD is bearish. Oh, now the MPD is bearish. The price respecting. We are having a reaction from this level here. There's a 5 minute plus, 5 minutes bearish affinity plus. So no, 15 minutes not hasn't closed yet. Yes, we were expecting market to push up here. I mean, we had nothing. So it's not a good environment to take a trade. Even you see all the bulls, consensus, ball plus, 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 and that's trend is, but the delta is with a bullish arrow going up, but still. So what do we want to see when it's a positive delta with arrow up, positive delta arrow up, ball plus, plus, but we have very low fall, -2%. So it's a bullish reversal. Yes, it's a bullish reversal, but it's not the best area to enter a bullish trade. So if, for example, if this 1 minute when price came here, this candle come in, get me in, push up, yes, and then why I get out is because this candle, if this candle didn't retrace at the 50%, candle went up, close bullish body close, and then this at this level here, Price went all the way up here and close above this level. Give a bullish break that will assure me trade, and he didn't, which means price highly likely he don't have enough strength to push up. So I'm like, okay, doesn't worth it anymore. And so I'm like, okay, okay. So these little things that you need to know, but how to know them? It's when you spend a lot of time on the chart, you check, you understand what price will for the dynamic. And beside of that price is in premium. Okay. So no. And you see, Sensen price came down here. Event price still respect this level here. But I will be entering this trade here and then staying here. It doesn't worth it. So that's why it's important for you to understand how dynamic price work. When is in your advantage, in the blink of an eye, you will get in and then boom, get profit right away. But if it's not in your advantage, no, don't enter, don't push price, don't force price. Okay? Your best shot now is to have a very body close. The best trade that will align with everything is very bearish body close. Price come inside of this level. Okay, so I was targeting inside of this unfair pricing gap on the 5 and 15 minutes. And probably price touch this MMA in external block. Yeah, highly likely price will do, but it might take a lot of time, which I don't like. So to see this price, I don't like. I like my stop. Even I haven't heard this price. Yeah, I will enter correctly. Well, price will keep pushing up. Highly likely price to deliver, but still, it wasn't the best. So that's why I give up. Yeah, no questions. And I think that's all for today. Thank you very much for watching. And anything, I will be updating. I'll be updating the MMM candle. So at some point you might not need this because everything is inside here. But you might have both. You might decide to stay both the other table. And you see, why is still going up? Because when you have here you have an MC2. MC2 say you have a lot of bullish MC2 bullish. You have an MC2 bear, which means you have a lot of volume. That's why I was saying that price really just pushed up, but price couldn't push up, and we have a very break, okay, which means if we have a very big price was supposed to respect price was supposed to respect this area here. See exactly what I was saying. Price was supposed to respect this area here. And price close bullish body close and disrespecting of the price gap. That's why I was waiting to take it here. So this is kind of the increase immediately. And went up. Okay. And I'm like, okay. And it touch this level. It didn't create a market change. It is not nice. Which means it's like only did I get out. I didn't get I cancelled my trade. So waiting, bullish body didn't give a bullish body close. Didn't give a bullish body close. It gave us bullish body close here, which was a bearish retracement from the MMPD. So far, see the MMPD? The MMPD say do not take it long. See the MMPD? Do not take it long. It's still bearish. Do not take a long trade. We are bearish. See the MMPD? Bearish. So will we have a bearish break? Bearish body close? We don't know. So so as I was telling you that we have to level and come all the way up to this level. So this level is filled. And this level is filled. So what's next? Okay. Will price come all the way up here as well? We don't know. All are we waiting is a bearish break in a bullish context. We expecting price to want to take this target here. on the 6 hours. However, in the 1 hour, we expect price to 1 hour, we expect price to respect this MMM short. We expect price to respect this and then push down. But we don't know. We don't know. So 15 minutes as well, we have the same thing. Price to respect this high and push lower. But in order to do so, we need price to go up to give us a bearish beautiful bearish. We don't have it, and then we have a bullish break here. This bullish break this should be bullish break here. Bullish break here. Now price completely filled out this level. Let's see. Let me stay here with you guys to see. Now price fill out this level. I think that's what we expecting price to do. So if I took this trade, it would have been like it. If I would take this trade, I should have taken here at this bullish break, but it wasn't convincing. We have a pink candle on the MBE, which means do price push up, price violate this level. We don't know. Are we having a reaction to this level to have a nice bearish trade? We don't know. Yeah. So we have another external block all the way up here, right before the target, this target that price we are waiting for on the 6 hours. This is our target. So this is what we expect price to take this high. Okay. Mhm. Will price bounce from this external block and give us a PO for bearish on the 5 minutes or 15 minutes? I don't think so. Will price take this high and give us a PO for base on this external block? I don't know. So we have this our external block here on the 15 minutes. On the 15 minutes, we have we have two external blocks here, which means we highly like we what do we want to see for our main trade is that price respect this area, this level, and then price highly likely to this opening gap. But so far, we are bullish, expecting price to do what? Take this target. Yeah. So there's a lot of bullish volume now. The bull volume is getting higher, so the bull volume in this volume line. So the volume line is based on volume profile. It's taking the volume, the highest volume level for you. Okay, there's some special calculation inside of it to plot this line. It's like an anchored line. See, always anchored in. See, now we are bully. We're still bearish. So we expect price to go up to take this level of liquidity. So this is the 5 minute. 5 minutes. In the 5 minutes, we have an external block. But at the same time, this external block, we have the 5 minutes is our target on each six. And then we have the external block here. This is the level that we want price to violate. Okay. Last line of defense. So we're still looking for a short. Once price let this level close above it, it's 50,000 5,488.00. Okay, so now the price is still bullish, but but we are looking for a bearish trade because it's too late now to enter to enter a bullish trade. It's too late, it's still bearish. So we expect price to respect this for the 5 minutes, price this high. Okay, good. I think that's all. But your best is to wait. Wait the 4 hour to close. Wait for see what the 4 hours. This is the best candle for you to trade the 4 hour on after 9:30, which is the 6 to 10 a.m. 4 hour. It's the best candle. If you can wait for it every day, this candle will give you a lot of success. Yeah. See, 5 minutes is resisting, but the main target on the 6 hours is here. See, as we were plotting hours, our main target. Then we likely keep pushing into it. Um, Closing. So remember, we had the closing side, affinity on 6 hours. Boom, boom, boom. Are we taking it? However, price on the 5 minutes, we had a external CDS, which doesn't really matter because the 6 hours is the boss. Okay, 6 hours is the boss. We're hoping that we have a beautiful bearish in this area, which volume level, we have 278, which means price can even go all the way up here, but we want this level here, this external block on the 15 minutes. Yeah, I think that's all. Okay, bye bye, guys. Please take care. It was wonderful to be here with you. If you have any questions, don't hesitate to write on the YouTube. All right, take care. Why is it still resisting? If this candle close, bullish body close above this line, the midline, we highly likely see price. So price, let me take this out. Take this out. Okay, price is entering a high volume level here. Okay, price is reacting to this area of 5 minutes. Okay, see, he didn't really close above it. So for us to enter a trade now, we want to see what? A pure for bearish. Price give you a pure for bearish, you don't know until you get it. The request can still come and take H6 high. Yes. Do you have a bearish trade? Yes. On 5 minutes? Do you have a bearish trade on 5 minutes? Yes. But what do you trade? You want a PO for bearish that didn't violate the high of the external block. Do you have a trade? Do you have a trade, a short on 15 minutes? Yes. Does that mean that price? Let me take the table away to just give you a clear explanation. Does that mean price? Does that mean price will not take this H6 high? No. But do you have a perfect trade with all the conferences almost on 15 minutes? Yes. But why do you need to take this trade? Pure for bearish. Pure for bearish, and then you target this low. Do you have it yet? No. Can you enter it short? No. In the higher time frame, what do you have? You have another external block here. Yes. In the 1 hour, do you have an external block? In the 1 hour? Yes. Where is it? This is the last round defense. You expect after price take this H6, um, the high of H6. Does that mean you have a short trade on 5 minutes? No. You have a short on 15 minutes? No, because the external block on 5 minutes and 15 minutes will be violated. If price uh, take this target here, do you still have a short trade in 15 in 1 hour? Yes, because you have an external block price. Get inside of it. The only thing you'll need in 1 hour now is a PO for bearish. As simple as that. So highly likely price come and take this high. Yes, highly likely. And then price is inside of an internal block show on in 4 hour. Yeah. And then do we have enough provision for price to come down here? For sure. You have an opening plus here. It's simple as that. This is the way you need to connect with price. You get a high time frame with lower time frame, and you take the best trade ever. You know, this could have been a nice trade for me, but I just didn't like what I didn't like here. I didn't like this 254%. 254% people shorted here. See, in this area, 254%. I could have seen that way before because of this candle behave like it's supposed to behave. They shorted here. So this candle was the boss. that crushed this area. No, no, not 254. So 200, really, 228 here, 228. See? 254, 228. This candle, so this candle was the one that said, okay, no more. We crush with power. They crush with power. So if you were to get where it will have went to, but still, it wasn't. You didn't have a bullish resumption. The bullish resumption happened here. The resumption happened here. The bullish resumption on the MMP happened here at this candle. Okay? The resumption candle which is back, you see? And the candle which is back and it'll push it, but it doesn't worth it at this point. Anyway, thank you guys, and what I've been saying bye. I think I'm too passionate about the market. That's one. That's why sometimes I don't do this. I can go in. Okay, all right, guys. Please take care. See you tomorrow.